Sachin Shah, Fund Manager at Emkay Investment Managers, joins us promised. Good morning, Sachin. Thank you very much for joining us. Well, what is the sense that you got from the correction yesterday? Is it giving an indication that this market is still going to trend higher and the September contract is shaping up at least now for a very good finish?
Well, the undertone continues to be extremely buoyant. What we are seeing is that the FII flows are very, very good. In fact, what we have also seen that it's almost now the third consecutive month where the domestic mutual funds have been net buyers in the equity market. We are seeing positive signs on the macro front where the oil has been very, very subdued. All this and some of the quarterly results were also not so bad. Government seems to be making the right noises. So the undertone still continues to be very, very buoyant in that sense.
Okay. Sachin, hi, good to see you in today. There was some positive news that came out for Larsen and Toubro with regards to a 5,100 crore order win. What is your sense in terms of L&T's financials going into the rest of the fiscal, and do you expect any incremental gains coming in from current levels for L&T?
Larsen and Toubro is one of the best engineering companies that this country has. And with the kind of the infrastructure investments that we all anticipate and expect to happen in the next few years, L&T on a longer term bet will continue to do extremely well. There is no doubt about that. It's just that, of late we've been hearing some issues in terms of their hydrocarbon sector in the last quarter results. That's what we saw. Yeah. Particularly in the Middle East part of the country, this section. So, these are some temporary hiccups. But yes, on the longer term, the company will continue to do extremely well.
Okay, well, there are some big moves coming in some stocks. Just note that the market is, while the mid-caps are generally higher, there are a lot of stocks that are under pressure. The JP group of stocks, JP Infra, JP Associates, all of them still continue to belabor. JP Power is the one that is least affected at this point in time, but then that's already a penny stock, 2.2% down. JP Infra is down 5%, and as I told you, JP Associates also down severely. Sachin, what have you made of this sudden fall? I mean, a minor sale by the promoters, hardly 170 crore, not very convincing when your debt is actually 60,000 crore. What's worrying the market, and are these worries now going to prevail for some time?
Frankly, the biggest issue is that some of these companies which are highly leveraged, I think the market is looking for some clear direction from this management that how do they plan to manage this debt in the next 2-3 years, either way of sale of some of their assets or, redeploying some back profits or whatever. So, unless this clear direction comes into play. Obviously, last few months there was a lot of euphoria, sentiment doing very well. So obviously all this, and of course the stock prices were also extremely depressed. So there has been some stupendous rise in some of the stock prices. But eventually it will all come back to reality, and then everybody is going to start asking, how do you plan to manage your balance sheet? And unless there is a very clear direction in terms of their plan of action for the next 2-3 years, I think this kind of companies will be out of flavor from the investor side.
You spoke in your earlier reply about the market still being robust, and very good reasons actually, with the kind of macro numbers we saw and the kind of fund flows that central banks continue to ensure for risk assets. Nevertheless, I mean, what are the levels you are looking at MK? We just had a number 9,000 from Vibhav Kapoor of IL&FS. Earlier, Motilal Oswal told us about even 10,000 by March. What would you be comfortable with, and in terms of Nifty levels?
It's difficult to, at least we don't look at those kind of levels as such. But the underlying theme is that, we are trading at something about 20 times March 15 Sensex PE or Nifty PE. Now, if the earnings growth is expected to be in the range of 15 to 20% for the next 2 to 3 years, and if it accelerates beyond that to say about 20-25%. I think that's the kind of, because at 20p you do not expect the overall markets to get re-rated significantly. But if the earnings growth itself is up in the range of 15-20% and eventually later on as the GDP does little better, about 20-25%, I think that's the kind of market gain that one can expect from the Sensex and Nifty in the next couple of years.
Okay. Sachin, the big story within the broader markets has been the gains that we've seen in a lot of these agri companies as well as a lot of the pharmaceutical, mid-cap pharmaceutical companies. For example, even a small company such as Suven Life Sciences is up 13% today and it's up over 100% YTD and it's still trading at subpar valuations as compared to other mid-cap pharma companies compared to it. Do you think that there could be those ideas which could now shine out in the market for incremental gains?
Frankly, if you see the post-election, the best sector which has done is the pharma sector. In fact, I was just seeing some data. It is almost up post-election, which is in the last 3 months. It is up by nearly 35%. So, and obviously, a lot of pharma companies have also delivered very, very good numbers. But now the valuations in most of the pharma companies, if not overpriced, they are somewhere reaching a fully priced kind of a band, right? So, and of course, there will always be some company-specific events, because pharma, if you see in some of the developed markets, if they get some 1 or 2 product approvals, that can be big blockbusters. But barring that, I think the valuations are now getting into that fully priced band. So from here on to expect something very spectacular from the oral pharma sector, even in mid-cap pharma, I think it's going to be a little too stretched to expect that.
Okay. I wonder what's happening in Ahmednagar Forgings. That's up 5.5% as we speak. Sachin. In fact, a bunch of stocks. Voltas has been better, great from the word go. That's up another 5%. And Igarshi Motors giving Ahmednagar Forgings Company another auto ancillary stock. That one is up about 2.5%. It has been a big day, a big year, a big month for auto ancillary stocks. Actually, mid-caps, Sachin, do you expect an outperformance? You spoke about some strong likelihood of the Nifty doing well. With mid-caps move twice as fast. And at MK, have you all spotted some undervalued potential multi-baggers?
We certainly believe that there's a lot of opportunity in the mid-cap and the small-cap space, particularly with the the tailwind coming back, and that's when this kind of companies really do very, very well. And in the last quarterly results also, we've seen quite a few companies delivering a very good result. And in each of the sectors, you'll find some of the mid-caps and small-caps. So, be it pharma, you'll find companies like Alembic Pharma, Ajanta Pharma doing very well, and quite a few more. In the auto ancillary space, we saw companies like Sundaram Fasteners, where we already own some stake. They've done quite well. In the IT space also, we've seen quite a few companies in the mid-cap, small-cap space like Sonata Software delivering exceedingly good results. And so on, and even in banking you will find a couple of stocks there which have done well. So on and so forth. In every sector you'll find a few mid-cap, small-caps which have done exceedingly well. And in mid-cap, small-cap, it's more of a bottom-up approach. So one will have to do a lot of research there before one makes a short recommendation.
Okay. All right, Sachin, we leave it at that. Thanks very much for joining in. So that's the view coming in from MK. And remember that you can watch that entire conversation that we just had on moneycontrol.com/CNBC TV18.